Open any crypto app and you'll see charts. Red and green candles, lines going everywhere, numbers that update every second. Most beginners look at it for 5 seconds and close the app. It looks like the Matrix. But here's the truth. You don't need to understand everything on a chart to use it effectively. You need to understand 3 things. And by the end of this video, you will. A crypto chart shows one thing: the price history of an asset over time. That's it. The bottom axis is time, hours, days, weeks, months. The side axis is price in dollars. Every point on that chart represents what someone was willing to pay at that exact moment. When you zoom out to see a year, you're looking at the collective decisions of millions of people buying and selling over 365 days. When you zoom into 1 hour, you're seeing the last 60 minutes of activity. The chart doesn't predict the future. It shows you what already happened. Most crypto charts use candlesticks. Each candle represents a period of time: 1 minute, 1 hour, 1 day, depending on your settings. A green candle means the price went up during that period. A red candle means it went down. The thick part of the candle, called the body, shows where the price opened and where it closed. The thin lines above and below, called wicks, show how high and how low the price moved before settling. One green candle on the daily chart means Bitcoin was higher at the end of that day than it was at the start. That's the entire concept. The rest is just reading the same pattern over and over. Now the actually useful part. Look at any crypto chart long enough and you'll notice the price tends to bounce off certain levels. It hits a low point, then climbs back up. It hits a high point, then falls back down. Those levels are called support and resistance. Support is a price level where buying pressure is historically strong enough to stop the price from falling further. Resistance is a price level where selling pressure is historically strong enough to stop the price from rising higher. These aren't magic, they're psychological. When Bitcoin hit $60,000 3 times and dropped each time, traders remember. The 4th time it approaches $60,000, many will sell before it gets there. That creates resistance. This is why the same price levels matter over and over. It's not the chart predicting the future, it's human behavior repeating itself. Volume is the number of coins traded in a given period. It's usually shown as bars at the bottom of the chart. Here's why it matters. A price can move on low volume or high volume. If Bitcoin jumps 10% on massive volume, that's real momentum. A lot of people are buying. If Bitcoin jumps 10% on almost no volume, that's weak. It could reverse instantly. Volume confirms whether a price move is real or noise. When price breaks through resistance on high volume, that breakout is more likely to hold. When it breaks on low volume, it's more likely to fail. Volume is the truth detector. It tells you whether the market actually agrees with the price movement or if it's just a few traders moving things around. Charts don't tell you what will happen. They tell you what might happen based on what already happened. The mistake beginners make is treating patterns like guarantees. Support breaks all the time. Resistance breaks all the time. A green candle doesn't mean the next one will be green. The chart is a tool for probability, not certainty. Use it to understand context. Is this price near a historical high or low? Has it been trending up or down for weeks? Is volume increasing or decreasing? Those observations help you make better decisions. But they don't eliminate risk. Nothing does. If you're just starting, use the daily chart. 1 candle equals 1 day. This filters out most of the noise. Look at the last 3 to 6 months. Identify 1 clear support level and 1 clear resistance level. That's your range. When price is near support, risk is lower. When it's near resistance, risk is higher. Don't overcomplicate it. Professional traders use hundreds of indicators. You don't need that. You need to understand where the price is relative to where it's been. That alone puts you ahead of most people buying crypto on hype. Comment daily chart if you're committing to ignoring the 15-minute noise and focusing on the bigger picture. Next video, I'm breaking down dollar cost averaging, what it actually is, and whether it's the strategy that makes sense for you. Subscribe to Unbanked. The old money had a head start. You have the internet.